Welcome to the complete tutorial for the Premium CCT Indicator version 3.6, the most comprehensive multi-timeframe trading system available for TradingView. This indicator combines higher timeframe analysis with lower timeframe precision entries. It tracks multiple points of interest simultaneously, detects fair value gaps automatically, and provides crystal clear entry signals with built-in risk management. Whether you're trading Forex, gold, indices, or crypto, this indicator adapts to your preferred time frame and trading style. To get access to this Premium CCT indicator, along with our other advanced trading tools, head over to our website at thedtctools.com. And as a special offer for our community, use the code TELEGRAM20 at checkout to get 20% off your purchase. That's TELEGRAM20 for 20% off. The link is in the description below. By the end of this tutorial, you'll understand every feature, every setting, and exactly how to use this powerful tool to identify high-probability trading setups. Let's dive in. The CCT methodology is built on a simple but powerful principle. Higher timeframes identify the setup, and lower timeframes provide the entry. Let's start with the timeframe presets. The indicator offers 3 preset combinations that you can choose from. First, we have daily/15-minute. Which is perfect for swing traders who want to hold positions for several days. Second is 4-hour/5-minute, ideal for intraday traders looking for same-day opportunities. And third is 1-hour/1-minute, designed for scalpers and active day traders. This is actually the default setting, and it works perfectly for trading gold. Now here's something critical you need to understand. You must use a chart time frame equal to or lower than your chosen lower time frame. For example, if you select 1-hour/1-minute, your chart must be on the 1-minute time frame or lower. The indicator will show you a red warning table if you're on the wrong time frame, so you'll know immediately if something's not right. Next, let's talk about setup type selection. You have 3 options here. POI only means the indicator tracks only point of interest setups. TS only means it tracks only turtle soup setups. And both means it tracks both simultaneously, which is what we recommend when you're getting started. POI and TS are 2 different entry strategies based on the same higher time frame setup. We'll cover exactly what each one means in just a moment. So what exactly is a setup? A setup forms when the higher time frame breaks structure. Let me explain what this means for both bullish and bearish scenarios. For a bullish setup, the higher time frame candle must close above the previous higher time frame candle's high. When this happens, the POI level becomes the high that was broken, which is from 2 candles back. The TS level becomes the low of the setup candle itself. For a bearish setup, it's the opposite. The higher time frame candle closes below the previous higher time frame candle's low. The POI level is now the low that was broken, and the TS level is the high of the setup candle. Now here's what makes version 3.6 special. Once a setup forms, it persists across all future bars. It doesn't reset on every higher time frame candle like older versions did. The setup stays active and continues tracking until one of 2 things happens. Either a new higher time frame setup forms, which overrides the old one, or the higher time frame closes beyond the setup candle's extreme, which invalidates it. For a bullish setup, that means closing below the setup candle's low. For a bearish setup, that means closing above the setup candle's high. This persistence feature gives you much more time to catch entries. You're not rushed to enter immediately when conditions are met. The setup will wait for you. One of the most powerful features of this indicator is the ability to track multiple point of interest levels simultaneously. Let me show you how this works. You have 2 key settings here. First is POI lookback, which controls how many higher time frame candles back the indicator will scan for untouched levels. The default is 25 candles, and you can adjust this from 1 all the way up to 200. Second is max POI count, which sets the maximum number of POI levels to track at once. The default is 5 levels, and you can go from 1 up to 10. The indicator automatically finds all valid POI levels for you. For bullish setups, it scans back through higher time frame history, finds highs that were broken by the setup candle, then verifies they haven't been touched by subsequent higher time frame highs. It will display up to your max POI count setting. For bearish setups, the process is similar. It finds lows that were broken and verifies they haven't been touched by subsequent lows. Each POI is numbered for you. POI 1, POI 2, POI 3, and so on. POI 1 is always the most recent level from 2 candles back. POI 2 might be from 6 candles back, POI 3 from 12 candles back, depending on where untouched levels exist in the history. The info table shows you everything at a glance, you'll see active POIs, which are levels waiting for entry conditions to be met. Triggered POIs are levels that have generated entry signals. And rejected POIs are levels that failed the risk-to-reward requirements. Each POI is tracked completely independently with its own conditions, its own stop loss, and its own take profit. Every entry requires 3 conditions to be met. Let me explain exactly what each condition means and why it matters. Condition 1 is the initial retracement. For a bullish POI setup, price must close below the POI level. For a bearish POI setup, price must close above the POI level. This confirms that we're getting a retracement into our zone of interest. For turtle soup setups, the same logic applies but to the TS level instead. Condition 2 is reclaim the level. For bullish setups, price must close back above the POI or TS level. For bearish setups, price must close back below it. This shows that price is rejecting the level and resuming the trend direction. Now, condition 3 is where things get interesting. This is the momentum confirmation, and you actually have 4 different modes to choose from. The first mode is candle high low, which is the original method. For bullish setups, the indicator tracks the highest point reached during the retracement. Entry triggers when price closes above that high. For bearish setups, it tracks the lowest point and waits for a close below it. This confirms that momentum is breaking to the upside or downside. The second mode is FVG mode, which uses fair value gap levels as the trigger. For bullish entries, the close must be above the lowest bearish FVG high. For bearish entries, the close must be below the highest bullish FVG low. This gives you more aggressive entries based on gap fills. The third mode is both mode, which is the conservative approach. It waits for both conditions to be met. You need the candle high or low condition and the FVG condition. This gives you the highest quality setups but fewer signals overall. The fourth mode is either mode, which is more aggressive. It triggers when either condition is met first, either the candle high-low or the FVG. This gives you more signals and lets you enter earlier. The info table shows you the status of each condition in real time. When you see C1 with a check mark, C2 with an X, C3 with an X, that means you're in the retracement phase. When you see C1 check mark, C2 check mark, C3X, that means you've reclaimed the level and you're waiting for momentum. And when you see all 3 with check marks, all conditions are met, and the entry is triggered. Fair value gaps are a crucial part of this system, so let me explain exactly what they are and how the indicator uses them. A bullish fair value gap forms when the high from 2 candles ago is lower than the low of the current candle. This creates a gap between the candles, and that gap represents the fair value area. A bearish fair value gap is the opposite. The low from 2 candles ago is higher than the high of the current candle. You have extensive control over how FVGs are displayed. You can show or hide them completely. You can choose between dark theme, light theme, or custom colors to match your chart. Border width can be adjusted from 0 to 3 pixels. Extend right controls how many bars to project the FVG box forward with a default of 5 bars. And max FVG boxes limits how many are displayed at once, defaulting to 50. You can choose to show mitigated FVGs, which keeps them visible even after price has closed through them. Or you can choose to delete mitigated FVGs, which removes them from the chart once they're closed through. There's also a minimum FVG size filter measured in ticks, so you can filter out gaps that are too small to be useful. You can optionally show FVG labels, which add text like FVG up arrow or FVG down arrow to each gap. And you can show the FVG middle line, which draws the 50% level. This midline is particularly useful if you're looking for partial entries within the gap. The detection process works in 2 phases. When a new setup forms, the indicator scans backward from the setup candle start, finds all valid FVGs in that period, checks if they're still unmitigated, and draws boxes for the active gaps. Going forward, new FVGs are detected on every confirmed bar during the setup period. Mitigation occurs when price closes completely through the FVG. The info table keeps you updated with bullish FVG count, bearish FVG count, how many are mitigated, and the total FVG count. If you want to trade only during specific market hours, the session filter gives you complete control. When you enable trading sessions filter, the indicator only scans for entries during your active sessions. You can enable up to 3 sessions simultaneously. Session 1 defaults to London, running from 8 a.m. to 12 p.m. Session 2 defaults to New York, running from 9 a.m. to 12 p.m. and Session 3 defaults to Asian session, running from midnight to 4 a.m. Each session is fully customizable. You can change the name to whatever you want. You can adjust the time range with any start and end time, and you can enable or disable each session individually. The session time zone setting is important. You can choose from UTC, America, New York, Europe, London, Asia, Tokyo, Asia, Hong Kong, or Australia, Sydney. Make sure you select the time zone that matches your location or your trading preference. When sessions are enabled, you'll see a subtle blue background during active session periods. The info table also displays the current active session name, so you always know if you're in a valid trading window. Here's something important to understand. The setup can form at any time, but the entry conditions are only checked during active sessions. This prevents entries during low liquidity periods when spreads are wide and price action is unpredictable. Professional traders manage risk, and this indicator gives you precise control over every trade parameter. Let's start with stop loss calculation. For bullish setups, the stop loss is placed at the lowest point reached during the entire retracement period, which is condition 1. The indicator tracks this dynamically as price moves lower during the retracement. Once condition 2 triggers and price reclaims the level, the stop loss locks in. For bearish setups, the stop loss is the highest point during the retracement period. The red stop loss line appears on your chart once an entry triggers. It extends from the setup start all the way to the current bar so you can see exactly where your stop is placed. Now for take profit, you have 2 modes to choose from. Dynamic TP is the default and recommended mode. The take profit is set at the extreme price reached before the entry occurred. For bullish setups, it's the highest high before the retracement began. For bearish setups, it's the lowest low. This represents your liquidity level, the area where profit taking is likely to occur. Before an entry triggers, you'll see a dotted line labeled LIC, showing where your take profit will be placed. Fixed RRTP is the alternative mode. Here, take profit is calculated as entry price plus risk times your ratio. The default ratio is 2.0, meaning your reward is twice your risk. You can adjust this ratio from 0.1 all the way up to any value you want. For example, if your risk is 10 pips, a ratio of 2.0 means your take profit is 20 pips away from entry. Now let's talk about the risk-reward filter. When you enable minimum risk-reward filter, you set a threshold that entries must meet. The default minimum is 2-to-1, meaning you need at least twice the reward compared to your risk. This filters out entries that don't meet your requirements. You also have a setting called strict risk-reward at confirmation, and this is important to understand because it changes how the indicator behaves. When strict mode is enabled, at the exact moment conditions 1, 2, and 3 are all met, the indicator checks the risk-to-reward ratio. If the ratio is below your minimum, the setup is instantly rejected. The POI shows in gray with risk-reward X, and no entry signal will ever appear for that level. When strict mode is disabled, which is flexible mode, the indicator is more forgiving. Even if the risk-to-reward is below minimum when conditions are met, the indicator doesn't reject it immediately. Instead, it waits for the risk-to-reward to improve. The entry triggers later when the ratio finally reaches your minimum. Flexible mode gives you more opportunities. Strict mode gives you higher selectivity. Rejected PO is shown gray or red with POI risk-reward X as the label. The info table tracks your rejected count separately so you can see how many setups didn't meet the requirements. If you want to trade only with the trend, you can enable the optional trend filter. When enabled, you also set the MA period, which defaults to 20 periods. The indicator plots a moving average on the higher time frame. A bullish trend is identified when the higher time frame close is above the moving average. A bearish trend is when the close is below the moving average. When the trend filter is active, bullish setups will only trigger if the higher time frame is in a bullish trend. Bearish setups will only trigger if the higher time frame is in a bearish trend. The info table shows you the trend status clearly. You'll see bullish up arrow in green for uptrends, bearish down arrow in red for downtrends, or neutral in gray if price is at the moving average. This adds an extra layer of confluence to your entries, ensuring you're trading with the overall market direction. However, it may filter out counter-trend opportunities that could still be profitable. So use this feature based on your trading philosophy. The indicator offers extensive visual customization, so you can match it to your chart style and personal preferences. For POI lines, you can customize the color for bullish setups, bearish setups, triggered entries, and invalidated setups. The line style can be solid, dashed, or dotted, and line width ranges from 1 to 5 pixels. Active PO is display in their assigned bullish or bearish color. Once an entry triggers, the line changes to green. If a POI is rejected due to risk-reward requirements, it turns gray. For turtle soup lines, you have the same customization options. The default colors are purple for bullish and fuchsia for bearish, but you can change these to anything you prefer. For stop-loss and take-profit reference lines, you control whether they show or hide completely. Stop-loss color defaults to red. Take-profit color defaults to green, and line width goes from 1 to 3 pixels. There's also a label style setting with 2 options. Solid gives you traditional opaque labels with full color backgrounds. Subtle gives you semi-transparent labels at 50% opacity. Subtle is the recommended choice because it doesn't obstruct your chart as much. For entry signals, you first choose the signal type. Arrows gives you visual markers only. Background color colors the entry candle's background, and both gives you arrows and background color together. Then you choose the entry display style, and this is important because it drastically changes how entries appear. Label is the most informative option. It shows a full label with POI1 long or TS short, along with the risk to reward ratio. It's positioned above or below the entry candle. This gives you the most information but can obstruct your view. Arrow is more compact. It shows a small arrow with just the risk-reward ratio, like 2.5R with an up arrow, much cleaner than the full label. Line draws a horizontal line at the entry price that extends forward 10 bars. The label appears on the right showing E, 1 up arrow, 2.5R. This is great when you're tracking multiple entries because the lines don't overlap with candles. Dot gives you the most minimal approach. It's just a simple dot marker positioned to show entry direction. The cleanest chart possible while still marking entries. And none removes all visual markers at entry. You'll still see all the information in lines and the table, but your chart stays completely clean. You can customize the long signal color and short signal color as well, defaulting to green and red respectively. For fair value gap visuals, if you select custom theme, you get full control over every color. Bullish FVG, fill color, border color, and midline color. Bearish FVG, fill color, border color, and midline color. And mitigated FVG, fill, border, and midline colors when the gap has been closed through. Plus label text color. The dark theme uses subtle greens and reds designed for dark chart backgrounds. The light theme uses subtle colors optimized for light backgrounds. And custom lets you create your own color scheme from scratch. The info table is your mission control. Everything you need to know at a glance is right there. You can show or hide the table completely. You can choose between compact mode and full mode. Table position can be top right, top left, bottom right, or bottom left. Table size can be small, normal, or large. And table theme can be dark or light. Compact mode has 13 rows and shows the essential information. You see the session name, trend direction, how many POIs were found with active and triggered counts, the level for POI1 and its conditions, POI status, the turtle soup level and its conditions, TS status, what C3 mode you're using, whether strict risk reward is on, and FVG counts. Full mode has 25 rows and adds much more detail. You get the higher timeframe / lower timeframe display, POI look-back setting, individual condition status for C1, C2, and C3 for POI1, individual condition status for turtle soup, current risk-reward ratios updated in real time, and detailed FVG statistics showing bull count, bear count, mitigated counts, and total FVGs. The table uses color coding to communicate status instantly. Yellow shows higher timeframe values and current levels. Green means conditions are met and trades are active. Red means conditions aren't met or trades hit stop loss. Orange means you're waiting or have partial conditions met. Gray means inactive or disabled features. Aqua is for POI-specific data. And fuchsia is for turtle soup-specific data. The table updates in real time as price develops. You can watch C1X turn to C1 checkmark as retracement happens. You can see the risk-reward ratio update tick by tick. You can track FVG count as new gaps form during the setup period. The indicator has a comprehensive alert system, so you never miss important events. There are 3 alert types you can enable. H, T, F. Setup. Alerts fire when a new higher timeframe setup forms. Entry signal. Alerts fire when all 3 conditions are met and an entry is triggered. This is the recommended alert to enable. And invalidation alerts, which is new in version 3.6, fire when a setup becomes invalid. To set up alerts in TradingView, click the alarm clock icon, set the condition to Premium CCT Indicator v3.6, and alerts will fire based on your enabled settings. Entry alerts include all the information you need. The message shows whether it's a POI entry or TS entry. The direction is buy or sell. The ticker symbol, entry price, take profit price, stop loss price, risk reward ratio, and whether you're using dynamic or fixed RR, take profit mode. Invalidation alerts, which are new in this version, tell you when a setup is no longer valid. The message includes the direction of the setup that was invalidated, the ticker symbol, and the reason. Either a new setup replaced it, or the higher timeframe candle closed beyond the setup extreme. All alerts fire once per bar, so you won't get spammed with repeated notifications. Let me walk you through the complete workflow from setup to entry, so you understand exactly how to use this indicator in real trading. Step 1 is to wait for a higher timeframe setup. You're monitoring your chosen higher timeframe, whether that's 1 hour, 4 hour, or daily. When the higher timeframe candle closes above the previous high for bullish, or below the previous low for bearish, your setup is confirmed. Check the info table at this point. It should show the trend status and session status so you know the environment you're trading in. Step 2 is to identify POI and TS levels. The indicator automatically draws these for you. POI lines appear in blue or orange for each untouched level. The TS line appears in purple or fuchsia for the turtle soup setup, and you'll see a dotted lick line showing where your take profit target is. Look at the table and you'll see something like POIS found, 3, with A:3, T:0. This means 3 active POIS with none triggered yet. Step 3 is to monitor conditions as they develop. As price moves on the lower time frame, watch the conditions in the table. When you see C1X, C2X, C3X, you're waiting for price to retrace into a POI or TS level. When you see C1 checkmark, C2X, C3X, price has dipped into the level and condition 1 is met. You're waiting for the reclaim. When you see C1 checkmark, C2 checkmark, C3X, price has reclaimed the level and now you're building momentum. When you see C1 checkmark, C2 checkmark, C3 checkmark, all conditions are met and entry is triggered. Also watch the risk-reward ratio in the table. It updates in real time. If it shows R:R 1:2.45 and that's above your minimum, the entry is valid. Step 4 is entry execution. When all conditions are met, the entry marker appears based on your chosen display style. It could be an arrow, label, line, or dot. The alert fires if you have alerts enabled. Stop loss and take profit lines extend from the setup start across your chart. And the POI or TS line changes color to green, indicating a triggered entry. Your entry parameters are clear. Entry price is the close of the candle that triggered condition 3. Stop loss is at the red line level. Take profit is at the green line level. Step 5 is trade management, which the indicator handles for you visually. As price moves toward your targets, the indicator tracks the outcome. If price hits take profit, the line turns bright lime green. The label updates to show POI 1 up arrow TP checkmark or TS down arrow TP checkmark. The trade is successfully closed. If price hits stop loss, the line turns red. The label updates to show POI 1 up arrow SLX or similar. The trade stopped out. When you're tracking multiple POIs, you have options. You can enter the first POI that triggers and ignore the rest. Or you can scale into multiple POI levels with smaller position sizes. Each POI is completely independent with its own stop loss and take profit, so you can manage them separately. Now let me give you some best practices that will help you succeed with this indicator. First, always respect the time frame warning. If you see a red warning table, you're on the wrong chart time frame. The indicator won't work properly until you switch to the correct time frame. Second, start with both setup types enabled. Track both POI and TS setups when you're learning. See which one works better for your specific instrument and trading style. Then you can specialize later if you want. Third, understand your take profit mode. Use dynamic TP for trending markets because it targets actual liquidity levels. Switch to fixed RR for ranging markets, where dynamic targets might be too ambitious. Fourth, if you're trading Forex, enable the session filter. Avoid low liquidity hours outside major sessions. Focus on major session overlaps like London, New York for the best price action. Fifth, choose your C3 mode carefully. Either mode gives you more signals because it's more aggressive. Both mode gives you higher quality because it waits for both conditions. Candle high-low is the most reliable and original method. FVG catches earlier entries but can be more aggressive. Sixth, start with flexible risk-reward mode. Strict mode is very selective and will reject many setups. Flexible gives you more opportunities to enter. Once you're consistently profitable, you can tighten to strict mode if you want. Seventh, keep the info table visible. Use compact mode if you have a small screen. Use full mode when you're learning because it shows every detail. The table is your real-time guide to what's happening. And eighth, manage your FVG display. Don't display too many boxes. 50 is usually the maximum you need. Consider enabling delete mitigated for a cleaner chart. And the midline is useful if you're looking for partial entries within gaps. Let's address common situations you might encounter and how to handle them. The first scenario is when a setup forms but no entry triggers. There are several possible reasons for this. Price might never retrace into the POI or TS level. This is completely normal. Not every setup will trigger an entry. Price might just continue in the trend direction without giving you a retracement. In this case, simply wait for the next setup to form. Another reason could be that you're outside the trading session. Check the table and see if the session name shows none. If sessions are enabled and you're outside the active hours, the indicator won't scan for entry conditions. Wait for the active session to begin. Or the trend filter might be blocking the entry. Check the table and see if the trend is opposite to your setup direction. If you have a bullish setup but the trend shows bearish, the trend filter will prevent the entry. You can either disable the trend filter or wait for trend alignment. The second scenario is when conditions are met, but no entry signal appears. You see C1 checkmark, C2 checkmark, C3 checkmark in the table, but no entry marker on the chart. The most common reason is that risk reward is below your minimum. Check the table and look at the R:R value. If it shows something like 1:1.5 and your minimum is 2.0, the entry doesn't qualify. In strict mode, the setup would be permanently rejected and show in gray. In flexible mode, the indicator is waiting for risk reward to improve before showing the signal. Another reason could be wrong chart time frame. Look for the red warning table at the bottom right. If you see it, switch to the correct time frame immediately. Or the entry might be on the forming bar. The indicator waits for bar confirmation before showing entry signals. The entry marker will appear when the bar closes, not while it's still forming. The third scenario is when multiple PO is trigger at the same time. This happens when POI levels are close together and price retraces through several levels at once. You have options here. You can take the first POI, which is the most recent level, or you can take the POI with the best risk-reward ratio, or you can scale into both or all levels with smaller position sizes on each. The table will show something like a :0 T:2, meaning 0 active and 2 triggered. Both entries are valid. The fourth scenario is setup invalidation. This is new in version 3.6, so let me explain what happens. Invalidation occurs when the higher time frame closes beyond the setup candle's extreme. For a bullish setup, that means the higher time frame closes below the setup candle's low. For a bearish setup, it means closing above the setup candle's high. When invalidation occurs, all POI and TS lines disappear from your chart immediately. Fair value. Gaps clear. The table shows 3 dashes for level values. And an alert fires if you have invalidation alerts enabled. This prevents you from trading against the new market structure. The old setup is no longer valid because the higher time frame has shifted direction. The fifth scenario is when fair value gaps aren't showing on your chart. Let's go through the checklist. First is the Show FVG setting enabled. Check your indicator settings. Second, are you inside the setup period? FVGs are only drawn after a setup forms. If there's no active setup, there are no FVGs. Third is your min FVG size setting too high. If it's set to something like 50 ticks and your gaps are smaller, they won't display. Try reducing it to 0 to see all gaps. Fourth, have you reached the max FVG boxes limit? If you're showing 50 boxes already, new ones won't appear until old ones are deleted. Increase the limit or enable delete mitigated FVGs. The sixth scenario is when lines keep disappearing from your chart. Lines will clear when a new higher time frame setup forms. This is by design because the old setup is being replaced. Lines also clear when the setup is invalidated, when you change the chart time frame, or when you remove and re-add the indicator. This is intentional cleanup behavior to keep your chart organized. For general troubleshooting, if you're not seeing any setup at all, ask yourself these questions. Is the correct time frame preset selected? Did the higher time frame actually break the previous high or low? Is your chart on the correct time frame? If no entries are triggering, check these things. Is the trading session currently active? Are risk-reward requirements being met? Are all three conditions actually met? Is the trend filter blocking entries? And if you're experiencing performance issues, you can optimize by reducing max FVG boxes, reducing POI lookback, using compact table mode instead of full, or disabling the setup type you're not using, either POI or TS. Once you've mastered the basics, let me show you some advanced techniques that experienced traders use. The first advanced strategy is multi-POI layering. Instead of entering your full position size at POI 1, you scale in across multiple levels. For example, you might take 30% of your position at POI 1, which is the most recent level, another 30% at POI 2, and the final 40% at POI 3, which is the deepest retracement level. The benefits of this approach are significant. You get a better average entry if price retraces deeper than POI 1. Your risk is reduced if POI 1 turns out to be a false break. And you can set multiple take-profit targets, taking partial profits at different levels. The second strategy is using turtle soup as confirmation for POI. This is a conservative approach where you wait for a POI entry signal first, then confirm that turtle soup is also triggering. This gives you double confluence, two different setups confirming the same direction. The trade-off is lower frequency, you'll get fewer signals overall. But you get higher quality because both setups are aligned. The third strategy is fair value gap plus POI confluence. The highest probability setups occur when your POI level aligns with a fair value gap. Price retraces into both zones simultaneously. Then condition 3 triggers via an FVG close, giving you multiple layers of support or resistance at the same price level. The fourth strategy is session-specific approaches. Different trading sessions behave differently, and you can optimize for each one. During the London Open session, volatility is typically higher. This is better for turtle soup entries because you can handle wider stops. Dynamic take-profit mode is recommended because moves can be larger. During the New York lunch period, volatility is usually lower. This is better for precise POI entries because price respects levels more carefully. Fixed risk-reward mode can work well because targets are more predictable. The fifth strategy is balancing trend and counter-trend setups. With the trend filter turned off, you can trade both with trend and counter-trend setups. But counter-trend setups need tighter stops because they're trading against the overall flow. Use strict risk-reward mode with a higher minimum, like 3-to-1, for counter-trend trades. With the trend filter turned on, you only get with trend setups. These are more reliable with better follow-through. You can use slightly looser stops and accept lower risk-reward ratios. Different instruments have different personalities. Let me give you optimized settings for major asset classes. For gold, which is what the default settings are designed for, the recommended setup is 1 hour/1 minute time frame. Track both setup types. Use either for C3 mode, set risk-reward to 2.0 in flexible mode, enable only the New York session. Set POI lookback to 25, and turn the trend filter off. The reasoning here is that gold is highly volatile, so either mode for C3 catches moves early before they run away. The New York session has the best volatility for gold, and flexible risk-reward gives you more opportunities in this fast-moving market. For Forex majors like EURUSD or GBPUSD, try 4 hour/5 minute time frame. Use POI only for setup type. Set C3 mode to both for quality. Use risk-reward of 2.5 in strict mode. Enable both London and New York sessions. And turn trend filter on with a 20-period moving average. Forex tends to trend more consistently than other markets, so the trend filter helps. The major sessions provide the best liquidity, and both mode for C3 ensures you're only taking the highest quality setups. For stock indices like S&P 500 or NASDAQ, use daily/15-minute time frame. Track both setup types. Use candle high-low for C3 mode. Set risk-reward to 2.0 flexible. Enable only the New York session for US market hours, and use fixed RR for take-profit mode. The daily time frame provides strong structural levels for indices. New York session captures the regular trading hours, and fixed RR is better than dynamic because indices can gap overnight. For crypto like Bitcoin or Ethereum, try 4 hour/5 minute time frame. Track both setup types. Use FVG for C3 mode. Set risk reward to 2.0 flexible. Turn sessions completely off because crypto trades 24/7. And set POI look back to 40 for more historical levels. Crypto markets trade around the clock, so session filtering isn't applicable. FVG mode works particularly well in crypto, and the longer look back captures more untouched levels from the volatile price history. Let's cover what's new in version 3.6 and why these updates matter. The first major update is persistent setup state. In older versions, the setup would reset every time a higher time frame candle closed. If the next candle didn't break structure, you lost all tracking and had to start over. This meant you had to catch entries very quickly. In version 3.6, the setup persists until it's either invalidated or replaced by a new setup. You can monitor the same setup across multiple higher time frame candles. This gives you much more time to catch entries and makes the indicator more forgiving. The second major update is setup invalidation logic. The indicator now has smart invalidation triggers. For a bullish setup, if the higher time frame closes below the setup candle's low, the setup is invalidated. For a bearish setup, if the higher time frame closes above the setup candle's high, it's invalidated. Or if a new setup forms, it always overrides the old one. When invalidation occurs, you get clear visual feedback. All lines and fair value gaps clear from the chart immediately. An alert fires if you have invalidation alerts enabled. And the table shows that the setup is now inactive. This logic prevents you from trading against the new market structure. If the higher time frame shifts direction, the old setup is no longer valid. The third update is improved session tracking. The old method used fixed array sizes and could lose session data on long charts. There were potential gaps in historical tracking. The new method in version 3.6 uses dynamic growing arrays. It maintains up to 10,000 bars of session history, and it provides reliable session checking for entry scans even far back in history. The fourth update is enhanced FVG scanning. The indicator now uses a two-phase scan process. Phase 1 is a pre-scan that scans backward from the setup candle start, catching fair value gaps that form during the higher time frame candle's development. This gives more complete FVG detection. Phase 2 is the forward scan that continues tracking new FVGs after the setup forms, just like before. The result is better condition 3 FVG detection and fewer missed signals. The fifth update is a take profit tracking fix. In previous versions, dynamic take profit only updated during session bars. This has been fixed in 3.6. Dynamic TP now updates on all bars, whether you're in a session or not. The impact is more accurate take profit levels and better risk-reward calculations. And the sixth update is the new invalidation alerts. This is a brand new alert type. When you enable invalidation alerts, you know immediately when a setup is no longer valid. This helps with manual trade management if you're in a position or watching multiple setups across different instruments. Let's wrap up with the key principles you need to remember. First, the higher time frame provides direction. Trust the higher time frame to tell you which way the market wants to go. Second, the lower time frame provides precision. Execute your entries on the lower time frame with exact timing. Third, three conditions are non-negotiable. C1, C2, and C3 must all be met before any entry. Fourth, risk management is built in. Every single entry has a defined stop loss and take profit from the moment it triggers. And fifth, persistence is the game changer. Version 3.6 gives you more time to catch setups because they don't reset every candle. Here are your next steps. Start with the default settings. They're optimized for gold on 1 hour/1 minute, but they work as a great baseline for any instrument. Practice in simulation or demo first before risking real money. Master one instrument before expanding to others. Don't try to trade everything at once. Become an expert on one market and learn its personality with CCT. Keep a detailed trade journal. Log every POI and TS entry. Record which conditions triggered and in what order. Track what risk reward you achieved. Calculate your win rate by setup type over time. Optimize gradually after you have real data. After 20 or more trades, review your statistics carefully. Adjust C3 mode if needed based on your results. Fine-tune risk-reward requirements to match your win rate. And modify session filters based on when you get your best results. And finally, trust the process. Not every setup will trigger, and that's completely normal. Not every entry will be a winner, and that's part of trading. Your edge comes from consistency and discipline. Follow the rules the indicator gives you without deviation. You now have access to a professional-grade trading system with multi-timeframe analysis, multiple POI tracking, turtle soup alternatives, fair value gap detection, dynamic and fixed take-profit modes, session filtering, trend filtering, sophisticated risk-reward management, real-time tracking tables, comprehensive alerts, and complete visual customization. This is the same type of system used by institutional traders, now available to you through this indicator. If you're ready to add the Premium CCT Indicator to your trading arsenal, visit the dtctools.com. Remember to use code TELEGRAM20 at checkout for 20% off your purchase. That's the dtctools.com with code TELEGRAM20. The link is in the description below, along with timestamps for every section of this tutorial. The Premium CCT Indicator gives you the structure and the rules, but you bring the discipline and the patience. Wait for quality setups that meet all three conditions. Respect your risk management without exception. Trust the system even when you have losing trades. Do this consistently, and you'll have a genuine edge in the markets. Thank you for watching this complete tutorial. If you found this helpful, please leave a like and subscribe for more advanced trading content. Now go apply what you've learned, stay disciplined, and happy trading.